Good evening, students. I'm C. Ankit Sharma, your income tax faculty for the session, and today we will be discussing the provisions of income from other source. In the last session also, we have discussed the provisions of income from other source, in which we have gone through with the charging section, the deemed dividend concept, the important provisions of gifts, etc. Then what are the incomes what are the expenses that are allowed while calculating income from other source, and those are disallowed while calculating income from other source. There were certain small exemptions also, like MP, MLA's allowances, amount received on disaster, compensation that has been received on disaster, etc. And also we have discussed the provisions of casual income. In the last session, we have skipped the provisions of LIC receipt, which is not exempted under section 1010D. And I have told you that we will discuss those LIC repayment provisions or maturity receipt in today's session. And we will also going to solve illustration, test your knowledge questions and queries also in this session. So I also asked you in last session that somebody will summarize the provisions also in a very short manner. So I would like to ask that if anybody wants to summarize the provisions, what we have gone through in the last session. So Priyanshi is interested in explaining the provisions. So Priyanshi, I would like to ask you that please summarize the provisions of deemed dividend. Anyone else who wants to summarize the provisions, or I would ask Priyanshi to summarize all the concepts we have gone through, but please make it summarize in a short manner within 10 minutes. So in that 10 minutes, you have to go through with the deemed dividend provisions and the gift provisions also. Do not discuss the small provisions like MP, MLA allowances, exemption, or compensation received on disaster, because that is very, very simple provisions. So Priyanshi wants to explain the provisions of our last session. So can we unmute Priyanshi?
Yes, good evening, sir. Sir, my voice is clear?
Yes, you're audible.
Okay, sir. Sir, should I tell only the headings like distribution of accumulated profits like that, or details also?
Not in much detail. You can explain like this, that section 222A explain about distribution of asset to the shareholder, in which the asset going to be distributed to the shareholder up to the FMV or the accumulated profit. The lower would be treated as deemed dividend. So just like that, you can describe all 222A, B, C, D, E, and F.
Okay, sir. Okay, sir. So we have done the methods of accounting, that is cash or mercantile system. Then second, we did income chargeable under this head. Under section 56, the first income chargeable only under this head, income from other sources head, is first is dividend. Dividend income includes dividend income is a wide scope and meaning than general law. First is deemed dividend under section 222 from A to F. A says distribution of accumulated profits entailing the release of company assets, capitalized or not, doesn't matter. It should accumulated profits, fine. Then cash is deemed dividend, and if it is received, it is if it is distributed in kind, then market value is deemed dividend for shareholders. Second, the B is distribution of debentures, deposit certificate to shareholder, and bonus share to preference shares. Bonus shares are bonus shares are market value to equity shareholders. Equity shareholders bonus share is not considered, that is not deemed dividend, but for preference shareholders market value is the bonus shares market value is deemed dividend for preference shareholders. Then third is distribution on liquidation, that is also same. It is out of accumulated profits distributed to shareholders, that is deemed dividend. Then fourth is distribution on reduction of capital. Then E is fifth is advance or loan by a closely held company to its shareholders, specific shareholders which possess 10%, minimum 10% equity share directly or indirectly. Indirectly means by company or firm where shareholder has substantial interest, or 10 beneficial ownership which is 10% or more voting powers, or third party, third party which will in future will give to shareholders. Exceptions to this E point is loan granted in ordinary course of business, dividend paid is set off against deemed dividend, buyback and these will not be considered as deemed dividend. Then F point is amount received by shareholders on buyback of shares by domestic company. This we have done in capital gain also. So before 1st of October 2024, shareholder will exempted and company will tax 20%, surcharge 12%, and cess at the rate 4%. And after 1st October 2024, shareholders received money will be deemed dividend and no expenditure will be available. Then exceptions to this which is not dividend is payment on buyback of shares, distribution in respect of non-participating shares issued for full cash consideration, and distribution of shares to shareholders on demerger by resulting company. Then we have seen casual income. We had seen that deemed income, deemed dividend. Now we are seeing casual income, which is lotteries, crossword puzzles, horse races, card games, gambling, and all. Then third is interest received on compensation or enhanced compensation deemed to be income in the year of receipt or taxable in income from other sources. Then fourth, we have seen advance forfeited due to failure of negotiation for transfer of capital asset to be taxable as income from other sources. Fifth, we have seen any sum of money or value of property received without consideration or for inadequate consideration to be subject to tax in hands of recipient. That gift, that is gift to gift, there are two means gift is divided into two parts. One is land and building, which is immovable, and second is movable, which is 8 items, which considers 8 items. Then we have seen for land and building, sum of money is fair market value of assets aggregated more than 50,000, that will come under income from other sources. And if aggregated, we see aggregated is for 8 items. If that is more than 50,000 for 8 items, cumulative, no, combining of 8 items is greater than 50,000, then that will come under income from other sources. Then we have seen value consideration, where uh, date agreement different from registration date. So stamp duty value on date agreement will be considered if stamp duty value of immovable property disputed by SSC, then valuation by officer. If it is less than stamp duty value, then it will come under income from other sources. Then we have seen movable items for those 8 assets without consideration, fair market value of aggregate, which is more than 50,000, that will come under income from other sources. And with consideration but inadequate consideration, the difference between aggregated fair market value and consideration, if it is more than 50,000, then it will become under income from other sources. Then we have seen applicability of section 56 to 10 only on capital nature, not on stock in trade. Then we have seen non-applicability, which consists many items like from any relative, occasion of marriage of individual, under a will or by way of inheritance and all. And a new section was included that was related to COVID-19. That in short, that consists that the certificate was required. That is the death certificate, the treatment certificate, which we have taken the treatment, and within 6 months the recipient should have died. Fine. So in short, we have seen that. Then meaning of terms, we have seen capital assets, immovable, shares, securities, and all. Then we have seen relatives. Relatives, HUF and individual. HUF is any member. Individual is spouse, his brother, sister of spouse, and these all we have seen. Then we have seen family. Family includes spouse and children of individual. Then parents of spouse, and mainly dependent on individual, wholly or mainly dependent on individual. Then we have seen compensation or any other payment received in connection with termination of his employment, if not in salary. If that is not included in salary, example, gratuity is included in salary. If it is not in salary, then it will be considered in income from other sources. Then we have skipped ULIP point, which we will see today. Then we have seen income chargeable only in income from other sources, not in PGBP, that is sum received by employer to SSC from employee as contribution. Then income from letting out on hire machinery, land and furniture, and separate from land and building is separate from plant and furniture. Then fourth, we've seen interest on securities. Exemptions were there, like interest on gold deposit bonds, interest on bonds issued by local authority, state, pooled finance entity, like that. Then we have seen any uh, wait, sorry. Okay, so then we have seen Keyman insurance policy that includes repayment to employer, that will come under PGBP, and repayment to employee will come if it is during service, it will be in salary, but if it after service, it will be income from other sources. Then fourth, we have seen residual income, that is MLA MP salary that includes. Then we've seen interest on money standing on credit of interest of his NRE account, and compensation received on disaster and educational scholarships, payment in competition of pensions received from setup by insurance, or awards for literally scientific and artistic works. These all we have seen. Then we have seen applicable rate of taxes, which is 30% plus surcharge plus cess at the rate 4%, and can claim rebate but cannot, but allowance expenditure is not allowed, no deduction is allowed, and no adjustment of unexhausted basic exemption limit is allowed, only rebate is allowed. And same with online games, 30% and surcharge and cess of 4% under section 115 BAC.
Correct. Well done, Priyanshi. Well done. You have completed a lot of provisions today, and I appreciate that you are a consistent student who is always ready to summarize the provision. Well done. So do not go further. Do not explain the incomes which are taxable or expenses which are allowable and disallowed, because that is more related to or more alike to the PGBP provision. So well done. It's enough. I really appreciate whatever you have done. So
Okay,
now we will
thank
continue
you.
to today's task.
Sir, excuse me, sir.
Yes.
Sir, I had confusion in deduction not allowable, sir. That I didn't understood. So please, can you elaborate in short?
Which page number can you tell
No,
me?
no, deductions not allowed. That.
You have an issue in reduction not allowable.
Yes, sir.
So which point do you have an issue? That's what I'm asking. No? Or you want to know what is the meaning of deduction not allowable?
No, that I understood, sir. Actually, that last point, no deduction in respect of any expenditure incurred in connection with casual income. That point,
This point you have in confusion. What confusion you have? That
sir.
provision.
After reading,
Okay, the
after,
provision is in case of casual income. If you are winning from lotteries, game shows, puzzles, online game, etc. So it says the net income is always going to be taxable without deducting any kind of expenditure. I've also given you an example that suppose you have earned 1 lakh rupees from KBC, and to earn that income, you have expend or incurred some amount of expenditure on traveling, etc. So we cannot deduct it. So no expenditure is allowed against casual income. Now tell me, what is the confusion in this provision?
no, sir. Actually, after reading from book, I just got confused.
Is it clear now?
Yes,
Or-
sir. Now it's clear. And sir, one last doubt, sir.
Yes.
In applicable rate of tax, casual income other than winning from online games is given different, and for online games different. But actually, sir, the provision is exactly same, that 30% surcharge,
Yeah,
tax, cess, and
provisions are same because online game has just introduced in India like 3 or 4 years back. So it was not that much in winning cases was not there in online games. So because the this kind of income has been started in India like 3 or 4 years back, so government has made a special provision for that. So the provisions are same, the tax rate, surcharge, the concept is exactly same, but the sections are different because earlier it was for gambling income or winning from game shows, etc., offline game shows. But because now online games has a very we can say a lot of online games apps are there and people are really into it like Dreams 11, etc. So due to those kind of activities, government has taxed them exactly with the provisions of earlier, but they have introduced a separate section. The reason for separate section is this, because in future if there is some amendment we need to make, so we can make it in this online game separately, and the other provisions which was earlier we can make the other amendments in separate provision. So all concept is same, tax rates are same, but section has been differentiated.
okay, sir. Thank you.
Okay, welcome. So a lot of queries in chat box. Astha is asking, sir, if closely held company gives advances to Mr. C in 22-23 and Mr. C transfers this amount to Mr. A in 23-24, then in which year it will be treated as deemed dividend? In 23-24, we will assume it as a deemed dividend, because suppose if it is not 23-24, if it is 28-29, then how can we go back and change our provisions of earlier years? So in the year, it will be established that the loan has been transferred to the specific beneficial shareholder. In that year, we can assume it as a deemed dividend in the hands of shareholder. Interim dividend is having same concept like normal dividend, Astha. Sir, if advance is received on 31st March 14 and forfeited on say 10th April 15, so the date of forfeiture is relevant. So because you forfeited in 10th April 2015, then it would be the part of income from other source. It does not matter when advance has been received. The forfeited year would be the chargeability year. Okay. Good evening, sir. Can you explain land and building part in chart on page 35 and also the clarification in page 3530 about interest on non-SLR? SLR is statutory liquidity ratio security, an investment made by an individual. So if you Google it SLR, what is the SLR ratio? For bank purpose, you can find it out the meaning of SLR. It's statutory liquidity ratio. So bank has to maintain it. Fine. So I will explain you from the notes. Let me see if there is any query which we can solve over here without going to the notes. Asta also asking if the loan is not covered by accumulated profit, then it will not be treated as deemed dividend, which means a loan is 1 lakh and accumulated profit is 70,000. Yes, only up to 70,000 will be treated as accumulated profit as deemed dividend. The balance 30,000 will not have any treatment like this. Okay. Astha is also asking one more question. If company charges loan at market rate of interest, but it is not company's ordinary course of business, then will it be treated as deemed dividend? Yes, exactly. Whether you charge a rate of interest, whether you repay it like an ordinary loan, but if it is not the ordinary course of business, that would be regarded as deemed dividend. Astha. Okay. Harsh Kaur is saying good evening. Good evening. Astha is asking, sir, please explain the distribution and impact of non-participating share issued for full consideration. For the purpose of understanding this, you should know the meaning of non-participating shares. So there are like a variety of equity shares we have: convertible, non-convertible, participative, non-participative. I believe you must have gone through in your 11th or 12th these kind of types of shares. So if any surplus has been available after distribution of asset to the liabilities, if any surplus exists, then we distribute that surplus to the shareholders. And even after distributing to the shareholder, any extra surplus has been left with the company. Then if you have participative shares, you can claim the surplus to yourself. But if you are having non-participative share, then you cannot have any right upon the surplus part of the value which has been remaining after setting off all the creditors and the shareholder. So if you are a holder of non-participative shares, then in that situation, these provisions of deemed dividend will not be applicable. So I recommend you that please go and search the detailed meaning of non-participative shares. Then you will understand what exactly and why it is not treated as deemed dividend. Harshada is asking, sir, not clear about in disallowance of 30% of expense payable to resident and on which tax is deductible. Please explain. Harshada, this is the exact provision which was in PGBP. So if you have gone through with the provision of PGBP, there's a separate section, I think section 48 for TDS payment. So there are certain expenditure, those are not going to be allowed if TDS has not been deposited and deducted. So in that provision of PGBP, it has been clearly written that if you are paying salary to a non-resident who is outside India, then TDS has to be deposited and deducted up to the due date of TDS. If not, you cannot claim that expenditure. In the same provision, it has been written in detail that if any payment made to a resident who is in India, and if TDS has not been deposited and deducted, then only 30% of that expenditure would be disallowed. 70% would be allowed if TDS has not been deducted and deposited up to due date of ROI. So if you did not deducted and deposited the TDS on that specific expenditure which has been paid to a resident in India, then even if TDS has not been deducted, deposited, you can claim 70% of that expenditure as expense and 30% would be disallowed. The 30% would be allowed in the year in which the TDS has been deducted and deposited properly. So the same concept has been derived into income from other source. So if you have earned any income, and for earning that income, if you need to pay some expenditure on which TDS liability is there, then even if you did not deducted and deposited TDS and payment to the resident in India, then you can claim the 70% of expenditure of that expense. Okay, you can go through with section 40A of PGBP. There is specific detailed provision regarding it. As I told you, the disallowance provisions almost alike as the PGBP disallowance provision. There are also provisions that personal expenditure would not allow. The same is income from other source. Capital expenditure would not be allowed. The same is income from other source. The TDS concept. The cash payment to a single person same day. The same concept in PGBP. If you pay excess amount to a specified person who is your relative, etc., exceeding FMB, the disallowance is there in PGBP also and income from other source. So if interest on post office saving bank is 5,000 of individual, with the difference of 1,500 taxable, 1,500 is going to be taxed because we have to tell the provision which is most beneficial to the assessee. So balance 1,500 need to be taxed on. Okay, so there is a query of, I guess, Ishan on 35.05. Let's see what you are asking, Ishan. I have also given you some homework questions on, I guess, section 222E. So I believe you must have solved all those examples. If there is any issue on those examples which I have given you as a homework, you can ask me. Okay, let me see which page number you mentioned. 3.505. Okay, in case of asset, there is also one asset has been included. You might have read this, that virtual digital asset also has been included in the definition of non-monetary gifts. After these 8 assets, the virtual digital assets also has been included. So these are like cryptocurrency, etc. But that has need to be dealt at final level. You can see that that's the notes has been there. It says the provision relating to virtual digital asset will be dealt with at final level. Okay. 3.505. So this is regarding TDS provision, I guess, Ishan, you were asking. So this chart we will go when we will complete the provision of TDS. We won't be able to understand it right now because the TDS provision has been left. So when we will complete our TDS concept, then you would be able to understand what exactly we are going through or what is the concept of this building provision, what you are asking, Ishan. Okay. So we have left the provision regarding repayment or the maturity proceed which has been received. The point number 7 we are going to discuss today one by one. And these provision, some received including the amount. Ishan, on page number 3.530, there are SLR provision. Okay, let me see that also. Student, you must have remember that we are going to have a problem solving class on day after tomorrow. So please go through or revise the provisions of capital gain and income from other source, and you can ask your problem, etc. on that date also. First of all, let me see what Ishan was asking regarding our note, which has been for SLR purpose. Interest from non-SLR securities of bank, whether chargeable under the head profit and gains of business or profession or income from other source. So we have seen that the interest which has been received by bank, I have already highlighted that. The CBDT clarifies that the investment made by a banking concern, so we are talking about banks, are part of the business of banking Therefore, the income arising from such investment is attributable to the business of banking falling under PGBP head. So any interest income which has been earned by bank is a part of his business. So that interest, whether it's for SLR purpose or for any kind of purpose, that needs to be taxed under PGBP, not under income from other source. Okay. So you can go through what is the meaning of SLR, that is statutory liquidity ratio. So bank needs to maintain some security for the purpose of regulation of Banking Regulation Act. Bank needs to invest some amount in SLR securities. So if interest earned from those security, that is also going to be taxed as PGBP income, not as per income from other source. Okay, Ishan? So now we are moving on to the provision, what we have skipped in the last class. And that is very, very interesting and little complex also. But the good thing, every provision is having an example. So it will clarify. When we will read the provision, you might feel that is confusing. But after each provision, there is an example to clarify what exactly the act is going to explain. So after reading example, you understand that yes, this provision is very, very simple. So point number 7, we will discuss. Okay. Arshada, I got it. Thank you, sir. Okay, Arshada. Sir, in the clarification, it's for banking company. And you want to ask for individual purpose. So if an individual is investing in anything, whether debenture, bonds, or any kind of security, and earning interest income, that is always going to be taxed as income from other source if it is not your business. So if an investor or an individual is having business of investment, then that interest income is also going to be taxed as PGBP. So generally, SLR security needs to be purchased. That is a regulatory requirement only upon bank. So that clarification is for only bank purpose. But if any kind of interest, which is your primary income, which is your ordinary course of income business, that is going to be taxed as your PGBP income, not income from other source. So if I will invest in these kind of security, that would be my interest income. But suppose I am an investment person who all involved in the business of purchasing and selling of security, etc. In that case, your interest income would be your business income. Okay, so before moving to point number 7, here is our thought for the day for all of you. And it's very beautiful. It says the beautiful thing about learning is that nobody can take it away from you. So it's a very simple thing that whatever knowledge you have, knowledge cannot be taken away by anyone from you. And it will help you till the end of this life. So whatever you will learn, that will always remain with you. That's the beauty of knowledge. And it will help you at any point of your life. It will have whatever you learn today in this journey of your life. Maybe you will get the benefit of that learning at some point of time of your life. So whatever you learn, just embrace that knowledge with yourself, because in future definitely will help you in any way in any point of time of your life. So please learn carefully, and the learning should be those things, those is going to be beneficial for your professional knowledge or personal knowledge. Okay. So let's moving on to the provision, and that is point number 7 we are going to discuss. So earlier there was a provision that any sum received from life insurance policy is going to be exempted. You can see the provision is what we are going to discuss is regarding sum received, including the amount allocated by way of bonus under a life insurance policy other than ULIP and Keyman insurance policy, which is not exempt under section 1010D. So if you are having a life insurance policy, then there would be repayment at 2 points of time. Whether the repayment would be on maturity, that means you have taken a life insurance policy for 10 years. So within this 10 year, if that person passed away after 2 year or 3 year, then his family or her family will get the maturity amount. So one repayment would be on death, and the other repayment would be on maturity. Maturity means 10 years has been passed on, but that person survives. So in that case, he will get the maturity amount. So if the life insurance policy amount has been received on death of that person by the family member, then section 1010D will apply, and that is going to be exempt 100% from tax, no taxability. But if it has been received on maturity, then we are having several provisions. In some case, that is going to be exempted. In some case, it's going to be taxable. So if that is a case on death, then there is no provision to be learned. It's very simple. Section 1010D exemption will be applicable, and your 100% amount is going to be exempted. But what are the other provision? That is what we are going to discuss in point number 7. So any sum received under a life insurance policy, including the sum allocated by way of bonus on such policy, would not be included in the total income of a person. So there are certain conditions which say section 1010D says that if that is a life insurance policy and you have received any kind of sum or the repayment, then that is not going to be the part of your income. But there are some exceptions. In some case, the exemption would be applicable. In some case, the exemption would not be applicable. Achha, whatever homework I have given to you, you have solved it, students. If there is any issue, you can ask me, okay? The following table summarize the exemption available under section 1010D vis-a-vis the date of issue. This is very important. Date of issue of such policy and the corresponding conditions to be satisfied for exemption purpose. So the issue date of policy is very important because according to the issue date of policy, the provision will change accordingly. Then you can see in respect of policy issued before 1/4/2003. So if the policy has been matured, but the policy issued date was before 1st April 2003, before this date, then that is going to be exempted whether it's a case of death or not. So even if the policy payment has been received other than death case, but suppose the date of policy issued has been before 1st April 2003, then 100% exemption. There is no requirement of any taxability. So you have to be very specific, very particular, very careful about the date of issue of policy. You have to learn that. If sum received under a LIP, including the sum allocated by way of bonus, is exempted. When it is going to be exempted? If it is before 1st April 2003. If the policy issued, okay, not the payment received. The payment might be received in previous year 24-25 against a policy that has been issued before 1st April 2003. In that situation, the payment received is going to be exempted. There is no provision which is going to tax it. So it is very simple. So this is A category, you can understand. This is first case or A kind of securities, A kind of policy. Then if in respect of policy issued, you are receiving repayment in previous year, but against a policy which has been issued between 1st April 2003 till 31st March 2012. So second category of policies are those policies which has been issued to you between 1st April 2003 till 31st March 2012. So if policies has been issued in this duration, an amount of repayment has been received in previous year 24-25. Then what will happen? This is going to be suppose our second category of section 1010D, other than death case. Any sum received under LIP, including the sum allocated by way of bonus, is exempt. But now there is a condition. If this condition fulfilled, then the repayment is going to be exempted. However, exemption would not be available. Very careful. If the premium payable for any of the years during the term of the policy exceed 20% of the actual capital sum assured. So it says, suppose the policy has been issued in 1st April 2010. So this fall between this time duration. Now the provision says, suppose the policy sum assured, the sum assured was suppose 20 lakh. Clear? Now the premium, we need to pay the premium every year. So the provision says premium should not exceed 20% of the policy sum assured. So suppose if the premium we pay is 3 lakh rupees every year. So that means it does not exceed 20% because 20% would be 4 lakh. And the case 2, suppose the premium is 4.5 lakh rupees per annum. So if the premium is 4.5 lakh, then the maturity proceed of this policy is going to be taxed. Because premium should not exceed 20%. If the premium is 3 lakh rupees per annum, then that premium is going to be, the amount on maturity received is going to be exempted. So if this is the premium value, the maturity proceed is going to be exempted. If this is the premium, the maturity is going to be taxed. And the very important word you have to see, for any of the years. What does that mean? That suppose the policy has been started from 2010 till 2015 we are going to pay. Then during this all these years, if in any 1 year the premium has been exceeded by 20%, more than 20%, then the exemption would be gone. The maturity proceed is going to be taxed at full. So category A was if the policy has been issued before 1/4/2003, 100% exempt, no other condition need to be checked. Okay. If the policy has been issued between 2003 till 2012, then if the premium does not exceed in any year more than 20% of capital sum assured. So the capital sum assured value would be given in the question. You have to just remember that the duration of policy issued if between 2003 and 12, then it should not exceed 20% of policy sum assured. And if it exceed in any previous year, then exemption would be gone. Clear? Now this percentage has been again changed. C case. On or after 1st April 2003. Priyanshi is saying homework done. Very good. Sir, if it is per annum, no, and not accumulated. What does that mean, Ishan? What you are asking? It is per annum, Ishan. We are talking about the per annum, not the lump sum premium. We are not talking. We are talking about the per annum premium. So if it any year the premium exceed 20%, your exemption would be gone. So this percentage of 20% has been changed from 1st April 2012 till 1st April 2013. This provision has been changed. And the percentage of 20% has been now reduced to 10%. Everything else is same. So if it is before 1/4/2003, no percentage problem, full exempt. If it is from 2003 till 12, the percentage need to be checked 20%. And from next 1 year, 12 to 13, only for 1 year of policy issued, this percentage has been reduced to 10%. Other provisions are exactly the same of point number B and point number C. There is no change in it. Okay. If any year we did not pay premium but paid in next year, and in next year it exceed due to premium of earlier year. So if you did not pay the policy premium, generally the policy lapsed. So if you did not pay the premium, the policy will be discontinued. But if in any case you have paid the combined premium, if it has been proved that the combined premium is for 2 years separately, then you can separate it. And on the basis of separate year, you can see if it does not exceed 20%, you can still claim the deduction or exemption. Point number D. Now the provision has been changed again. So the complicated provision is from point number E. A was simple, B 20%, C 10%, and D is having 2 rates. It is 10% and 15%. If that person is handicapped, if that person is suffering from physical disability, that means handicapped, as per section 80 DDB, that is going to be discussed in deduction. So if the person upon which policy has been taken is handicapped, the percentage would be 15% of capital sum assured. And if it is other, not a handicapped person, not a person with disability, then percentage of 10% would be continued. So that is for policies. Those have been issued on or after 1st April 2013. So 10% is still same. One additional 15% has been comes into the force for the purpose of person. Those are suffering from physical disability. So you can see this. Point number is for those person where the insurance is on the life of a person with disability or severe disability. What is the difference between disability and severe disability? That's going to be discussed in deduction topic. Section 80 DDB and 80U deals with reduction and aspect of a person with disability, normal disability and severe disability, as referred to in section 80U or 80 DDB. So for that purpose, it is 15%. You can see any sum allocated, the maximum amount is 15% of the capital sum assured. And for other person, normal category of person, it's again 10% same. So now you can see before 2003, there was no percentage issue. Then for almost 9 years, that is 20%. Then for 1 year, it's 10%. And from that year, it is now 10 and 15%. Again, the last change, what has been introduced, it is from 1st April 2023 on or after. So up to 31st March 23, this provision was applicable. Now this is my point number E. And from this point, the provision has been little complicated, you can say, little complex, you can say, because earlier it was only percentage limit was there, but now there is percentage as well as a monetary limit also has been introduced in these provisions. Now from 2023 on or after 1st April 2023, now the concept says 10% as earlier or 15%. It should not exceed 10% or 15%, and 5 lakh rupees premium cannot exceed 5 lakh rupees also. If it exceeds 10% or in amount 5 lakh rupees, then you cannot claim the exemption under section 1010D. So what was the provision up to 31st March 23? Suppose the sum assured was 70 lakh rupees and the premium we paid is 6 lakh rupees. So it is still less than 10% because the 10% is going to be 7 lakh and our premium paid is 6 lakhs. So exemption is there at the time of maturity. You can claim. But after introducing this concept from 1st April 2023, now suppose if sum assured is 70 lakh and you are paying 6 lakh as premium. So 10% condition is satisfied, but 5 lakh condition is not satisfied. Now you have to fulfill both condition. It is not, or we can say and. It should not exceed 10%. It should not exceed 5 lakh. If it exceeds 5 lakh rupees or 10%, you cannot claim exemption under section 1010D. That is again simple. You can think that still the provision is not that difficult. The percentage earlier was now connected with a overall amount of monetary value also, and that is 5 lakh. So what we will do, we will see it is exceeding 10%. No, it is not exceeding 5 lakh. Exemption would be there. And if it exceed, exemption would be less. But there's a problem. There could be single policy or there could be multiple policies also. So either this 5 lakh and 10% condition would be applicable for aggregate policies or only for individual policy. That has also been clarified. The 5 lakh limit is aggregate policy. Now we are going to read this concept in detail. Any sum received under a LIP, including the sum allocated by way of bonus, is exempt. Okay. However, exemption would not be available. So this concept, you can say this is old provision kind of concept, that your premium should not exceed 10 or 15% of the capital sum assured. The new condition has been inserted is this. This is the new condition which has been inserted. Further exemption would also not be available if the amount of premium payable exceed 5 lakh rupees for any of the previous year during the term of such policy. So for every year, it should not exceed 10% or 5 lakh. It should not exceed 15% or 5 lakh. If it does so, exemption would be lapse. But what if you are having multiple policy? Now this concept is for multiple policy. Like you are having one policy from life insurance companies, some other is from Reliance, etc. So you may have multiple insurance policy also. So the concept says, now in case of multiple policy, we will see this 5 lakh limit in aggregate. In case of where premium is payable by a person for more than one LIPs, other than ULIP, and the aggregate of premium payable on such policy exceeded 5 lakh, aggregate. So you are paying premium for 3 policies, suppose 1.5 lakh, 1.5 lakh, and 1.5 lakh. So it is 4.5 lakh. So not an issue. But suppose you are paying premium for 4 policies. 1.5 lakh, 1.5 lakh, 1.5 lakh, and 1.5 lakh. So aggregate it is 6 lakh. So now you cannot claim the exemption, but the thing is not over. If you are running 4 policies, 1.5 lakh, 1.5 lakh, 1.5 lakh, 1.5 lakh. So in aggregate, it's 6 lakh. And suppose you are receiving the compensation from all policy in our previous year, 24-25. The maturity proceed is 10 lakh. In this case, it's suppose 15 lakh. In this case, it's 18 lakh. And this is the 14 lakh rupee. So you have received 4 compensation from 4 different policies. And the premium paid was 1.5 lakh every year out of those 4 policies. So now your total amount cannot be exempted as the aggregate is exceeding 5 lakh. Because it's exceeding 5 lakhs, all policies cannot be exempted. You can exempt any 3 policies out of these 4 policies. So if you are having multiple policies and the aggregate premium exceeding 5 lakh, then we can select those policies we want to claim exemption. For those policies, those premium does not exceed 5 lakh. So can you tell me out of these 4 policies, which of 3 I should select for the purpose of exemption? Policy number 1, 2, 3, 4 or 1, 2, 3 or 2, 3, 4 or 3, 4, 1, whatever permutation combination you can make. And you can tell me out of these 4, which 3 we should claim for exemption. Ishan is saying 2, 3, 4. Priyanshi is saying 2, 3, 4. Almas is saying 2, 3, 4. Wow, everybody is giving me the correct answer. Wi-Fi from Hi-Fi, everyone. Very well done. Of course, because we will claim those policies for exemption which are having more amount of maturity proceed. So only 10 is going to be taxable, 15 exempted, 18 exempted, and 14 exemption. So this will lower our tax liability. It is clear for everyone why we are going to take exemption of 2, 3, 4? Kirti, Arshada, everyone? Good. So if you are having multiple policy, then the provision says that in this situation, you can select those policy for which the premium does not exceed 5 lakh rupees in aggregate. So the concept, what explain this thing, let me read it for you. In a case where premium payable by a person for more than one LIP, the aggregate exceeded 5 lakh. For any of the previous year during the term of such policies, exemption would be available in respect of any of those LIPs at the option of the assessee. So you can select which policies exemption you want, but the aggregate should not exceed 5 lakh rupees for any of the previous year during their term. Now, suppose if I'll say that the premium of 4th number policy, the premium is 5.5 lakh. The premium of 4th number policy is 5.5 lakh individually. So we cannot take this for benefit, then we will take 1, 2, and 3 for the purpose of exemption. So if any policy individually premium exceed either 10% or 5 lakh, that is going to be out for the purpose of exemption. So even we are just going through with the provision, and I believe you are understanding what is exactly happening. There are year of issue you have to learn for the purpose of examination, and the percentage of premium and the condition and the restriction you have to learn to find out whether that is going to be exempted or the exemption would not be there. But the good thing is yet to come. This guidance note, these provisions are having separate example of each of this condition what we are discussing. So when you will go through the example also, this thing would be clear like a crystal clear thing. Any sum is received on the death of a person. Remember, in case of death, there is no problem, always exempted, whatever is the premium, whether exceeding 5 lakh, whether exceeding 10, 15, 20, does not matter. Is exempt irrespective of the annual premium payable on the policy. The condition of payment of 10, 15, 20, 5 lakh would not be applicable. So always remember, income tax is an emotional act. So whenever there is a concept of life or health, etc., they will provide you the benefit regarding the taxability. So because somebody has been passed away and his or her family receiving the insurance compensation, and at that time income tax came and said, please give us tax. So how bad it will look now from the point of view of other person, that somebody has been passed away, family is receiving the compensation, and income tax is asking for tax. So the picture would be very bad. That's why exemption is always there if there is a case of health or life under Income Tax Act. You will see in several cases it is there. When there is, like we have seen in the income from other source, the medical treatment expenditure for COVID, the amount received on death due to COVID, etc., there are exemption benefits. Okay. In the same way, there are always benefit when there is thing about medical treatment or life is there under Income Tax Act. So till now, any problem, any confusion? I don't think so there would be any confusion. Now, exemption is not available in respect of amount received from an insurance policy taken for disabled person under section 80DD. So 80DD is again deduction topic. So suppose there is a person who is handicapped. Mr. H is all his expenditure, his daily expenditure, his survival expenditure, his medical treatment, etc., has been done by Mr. A. Suppose Mr. H is handicapped, he is dependent upon Mr. A. And Mr. A is the person who is actually maintain Mr. H. So if Mr. A takes an insurance policy on the life of Mr. H, clear? Then whatever insurance premium Mr. A paid, he can claim deduction under section 80DD. But now the concept is saying that suppose on the death of Mr. H, if Mr. A received maturity proceed, in case of handicap, the provision has been changed. It is not exempt under section 1010D, because if you or your family receive, in that case, it is exemption under section 1010D in the case of death. Your family receive, of course, you cannot receive on your death. But if you maintain a handicap, and you are claiming deduction under section 80DD for that handicap, then on the death of that handicap, the amount received is not going to be exempted under section 1010D. So the provision says any sum received under section 80DD3 shall not be exempted under section 1010D. Accordingly, if the dependent disabled in respect of whom an individual or the member of HUF has paid or deposit any amount in the scheme of LIC or any other insurance predeceases, predeceases matlab passed away. So if any individual or HUF is maintaining a handicap and paid insurance premium on the health of that handicap, and that person, that handicapped, has passed away, and for which we are claiming deduction under section 80DD. In that case, the individual or the member of HUF, they will receive the amount. The amounts of paid deposit shall be deemed to be the income of assessee of the previous year in which such amount is received. such amount would not be exempt under section 1010D. So whatever amount they have deposited for claiming the deduction, that is going to be taxable. But the amount received on maturity, that is going to be exempted, but the amount they have deposited. For example, Mr. A maintain a handicapped. And for that handicapped, he claimed deduction under section 80DD and paid amount 1 lakh rupees. Second year, 1,50,000. Third year, 2 lakh. Fourth year, 60,000. And suppose his handicapped has been passed away. Then the amount he has deposited under section 80DD is going to be taxed. That is not going to be exempted under section 1010D. The amount he will receive on the death of that handicapped is going to be exempted, but the amount he has claimed deduction under section 80DD on deposit, etc., that is going to be taxed. So this provision will be, I guess, more clear when you will go through with the section 80DD provision. Exemption is not available in respect of sum received under a Keyman insurance policy. We have gone through with this concept in the last session, that if you are receiving Keyman insurance policy money, it is going to be taxed either under the head of PGBP or that is going to be taxed under the head of salary or under income from other source. So that is 100% taxable. Keyman insurance policy maturity is not allowed to claim exemption under section 1010D in any case. So can you tell me when this is going to be taxed under PGBP? As I've explained you in the last session, when this Keyman insurance policy compensation is going to be taxed under income from other source and when under salary head of income. Let me see who will give the answer. Miss Priyanshi is saying maximum 3 policies fixed, or is it just an example? Priyanshi, it was just an example. There could be multiple policies. If the premium is paying for like 20,000 for one policy, 30,000 for another, and there are like 5 policies, so you can claim until the aggregate exceed 5 lakh, you can claim exemption of those policies. If the aggregate exceeding 5 lakh, then you can select those policy, those aggregate is less than 5 lakh. And in that case, we have to be very careful because we have to select those policies only. Those exemption will give you the maximum benefit from the point of view of taxability. Totally, Anil is saying you explained very painlessly, sir, like a treating patient without pain. Thank you so much, Mr. Anil, for your appreciation. That's why faculties are there. So I actually enjoy teaching. This is my hobby. I have been in this teaching profession more than 20 years. So I love when I teach. Okay. So thank you once again. Sir, even if Mr. A is a family member of the handicapped, yes, even if he is a family member of an handicapped, the amount deposited under section 80DD, that is going to be taxed. That is not going to be exempted. That amount is going to be taxed out of the amount received. So whatever amount on the death of handicapped you will receive, up to that 80DD deduction is going to be taxed and balance is going to be exempted. Ishan has given the answer. If received by company, PGBP, okay. Not company, we should say employer, okay. This would be the correct answer. You should not write company. So it should be the word employer. That is going to be taxed in PGBP, the amount received by the employer. If employed during service, salary, very well done. During service, if received by employee. And if after service received by employee, that is going to be taxed under income from other source. Well done, Ishan. Very good. Pooja also gave PGBP, employer at Keyman, employer PGBP, yes, employee salary, relative, not relative, Miss T. If during service, then salary. If after service or if relative received, then only income from others. Mohammed Farhan is also saying company do not, okay, company taxable PGBP received by employer, correct, and salary and income from other source. Okay. Somebody has given 90%. Harshada, that 90% and 10% is just for example. Why you are writing 90% by the employer? If employer receive 80% of the repayment amount, then 80% is going to be taxed under PGBP. So do not learn this 90 or 10. That is for example purpose. You should learn, you should remember the amount received by the employer is going to be taxed as PGBP, and if employee, then either salary or income from other source, depending upon the situation. So may say. Correct. Sure. Very well done. So now the provision we have discussed, the CBDT has issued circular, and the circulars is with conditions and examples. So you will be able to understand what exactly provision government has been made. And with the help of example, we can see exactly how to treat that kind of question in your examination. Let me tell you, it's very, very important for examination also, because from the last year it has been inserted. So in my opinion, for the purpose of examination, there must be a question from these provisions. It should be there, okay? So section 1010D classification is here. And you can see with effect from assessment year 24-25 1010D amendment. And now it says where in case when assessee is a single life insurance policy, then we have seen that if it's single life policy, if it does not exceed 10%, the aggregate amount is 5 lakh, then you can claim the exemption. And in case of multiple policy, we have already seen that the aggregate of those policy, those premium does not exceed 5 lakh. You can claim exemption regarding those policies. The same concept has been again explained over here. We have already gone through with this concept. Exemption in case of death of a person. Also, we have gone with this concept. Now the guidelines with example and with solutions also. In case any difficulty arises, CBDT has made a prescribed example to make you understand how to solve this question. And now, one by one, we are going to understand the concept with example. This is situation number 1. Now you have to understand very carefully what is situation number 1. Please listen very carefully. Situation 1 says, if there is a question, and if in this question it says that suppose the assessee received LIC sum, LIP sum in previous year 24-25 first time. That means it has in this question, if the question framed like this, that the repayment from LIP policies has been received in previous year 24-25, suppose 30 lakh rupees, and it has not been received ever earlier. That means we are receiving this amount first time, and the assessee had not been received any LIP sum in earlier year and did not claim exemption earlier also. So if the question says, suppose in 2021 and 22, he received a sum of LIC policy rupees 30 lakh, and that has been exempt in 21-22, and now in 24-25, he is receiving a sum against LIP rupees 15 lakh. Then the treatment would be different. That would be situation number 2. Situation 1 deals only with those cases. Listen very carefully. Situation 1 deals only with those cases in which the assessee receiving sum from LIP first time and it has been never claimed exemption in section 1010D earlier. Or you can understand very clearly that you are about to claim exemption section 1010D first time. If the question says that assessee has received in 21-22 sum of LIP and claim exemption under section 1010D, suppose rupees 15 lakh, then that case does not fall in situation number 1. For that purpose, there is situation number 2. So you understand what situation 1 explained, that you are going to claim exemption under section 1010D first time. Understand it? in this way, that you did not claim section 1010D exemption earlier. Okay. So this is the paragraph that is going to explain you what I was trying to make you understand in simple language. No sum of any nature, including bonus, is received by assessee on any LIP which are issued on or after 1st April 2003 during any previous year preceding the current previous year. So for those policy, those has been issued on or after 1st April 2023. You are claiming exemption first time. So if you already claim exemption section 1010D earlier, then situation 2 will be applicable. Okay? In the previous year in which consideration is received and its taxability is being examined. So we are checking that whether you are going to claim exemption in this previous year or not, first time, or consideration has been received on such eligible LIPs in an earlier previous year. Even if you have received compensation in earlier year, but you are not able to claim exemption in section 1010D, then that is also situation number 1. Situation 1 will be there until you did not claim section 1010D exemption earlier. If you have already claimed section 1010D exemption earlier, then situation number 2 will be applicable. You will understand it very easily when we will go through the example. But has not been claimed exemption. So the everything has been related to section 1010D exemption, that if you did not claim this exemption under section 1010D earlier, for those policies, those has been issued on or after 1st April 2023. If you have claimed exemption of policies, those have been issued before 1st April 2023, then not a problem. So any policies, those have been issued on or after 1st April 2023, and in previous year 24-25, you are claiming exemption first time, then situation 1 would be applicable. Okay? In such a situation, the exemption under section 1010D would be determined as under. When I will solve an example, you will understand it very easily. Situation has been there that if the amount of premium payable on such eligible LIP does not exceed 5 lakh for any of the previous year, during the term of such eligible LIP, and annual premium does not exceed 10% of actual sum assured, such consideration would be exempted. So if it does not exceed 5 lakh or 10%, there would be exemption. And you can see the table say refer example number 1 and 2 below. So we will see that example. Now it says, suppose if the premium exceeding 5 lakh rupees, in that case, you cannot claim exemption under section 1010D. So we have already gone through with this provision earlier. We are just seeing situation 1 and situation 2, how we need to implement those provisions. The provisions are same. Either you would have a multiple policy or you would have a single policy. If does not exceed 5 lakh, you can claim the exemption. If it exceeds 5 lakh, you cannot claim the exemption. But situation 1 and situation 2, you have to identify in the example first. So if you are going to solve a question, so the first thing you need to check whether situation 1 case is there or situation 2. How you will differentiate situation 1 or 2? If the policy amount we are receiving in the previous year and we did not claim any exemption under section 1010D earlier, for policies, those have been issued on or after 1/4/23. That is situation number 1. If you have already claimed deduction under section 1010D for any policy which has been issued on or after 1/4/23, then situation number 2 would be. In both situations, there would be 2 separate cases. When there are single policy, when there are multiple policy. So let's see with the help of example. Date of issue you can see 1/4/2013. Annual premium 6 lakh. Sum assured 60 lakh. Amount received on maturity is 7 lakh rupees. So would it be exempted or taxable? With the help of provision we have gone through, and you can see the note says the assessee did not receive any consideration under any other eligible LIPs in earlier year before 24-25. Eligible LIPs means those LIP, those has been issued on or after 1st April 2023. So this is the name of those policy, those has been issued on or after 1st April 2023 in these examples. So is it going to be exempted students or taxable? And what is the reason behind it? The premium amount is 6 lakh and the capital sum assured has been given to you also. So what should be the correct answer? Ishan is saying exempted as the premium does not exceed 10%. Okay, Pooja is saying exempted. Anubhav is also saying exempted. Very well done. Anyone else? Farhan is saying exempted. Very good. Well done, everyone. The 5 lakh limit, we are not checking in this. Why we are not checking the 5 lakh rupees limit in this case? What is the reason? It is exceeding 5 lakh rupees. Then why you are saying it is exempted? What is the reason we are not considering 5 lakh rupees? Correct, Pooja. It is issued before 1st April 2023. So that's why it is very important, because when you will solve generally question regarding this concept, the 5 lakh would be in your mind. And when you will see 6 lakh, maybe you are going to say that is going to be taxable. But what I told you, kindly find out first of the situation. Why this is situation 1 case? Because the question says no consideration has been received for eligible LIPs earlier. Situation 1. After finding out the situation, you have to see always the date of issue of policy. This is our second step. And you can see date of issue is 2013. So till that time duration, there was no 5 lakh there. So in that case, that is going to be exempted. So here is the answer also. You can go through it. The percentage was only 10% concept was there. There is no 5 lakh limit was there. It is not applicable. So that is exempted. Now the second question. Date of issue is 1st April 2023. 5 lakh is premium. Sum assured 50 lakh. Amount received 52 lakh. No policy redemption of eligible policies has been received earlier. Again, situation number 1 question is there. Now, date of issue is 1st April 2023. So 10% and 5 lakh, both applicable. Are both conditions satisfied? The answer is yes. And because the answer is yes, so that is again going to be exempted. Now tell me, is it difficult? If you understand the situation 1, situation 2, and if you remember the date of issue concept, then in the examination, you just need to write it down exempted or taxable. That's it. So you do not need to do any kind of calculation in this kind of question. You have to write it down your answer according to the provision that because this is the situation 1, the policy issue date is this one, and there are concept of 10% and 5 lakh, both has been fulfilled, so it is exempted. You have to explain this thing. Okay, not only you can write that it is exempt in section 1010D. So you have to explain the concept and provision also. Okay, Abhi, you will feel more easy. Abhi, we just solved 2 questions and you are feeling that okay, I just need to check only these 2 things. So date of issue and the percentage, very important to be remembered. Now you can see you have to write it down in examination like this. And these answers situation has not been written because they are actually in the starting they are saying that we are going to solve situation 1 examples. So in the examination you need to mention also that it is situation number 1 when there is amount received and the earlier and no eligible life insurance policy amount has been received. So please write it down also in the examination. Now example 3. Date of issue is 1st April 2023. The premium is 6 lakh, sum assured 60 and 70 lakh. So what should be the answer, student? Taxable or exempted? You can easily find it out. Of course, the correct answer is taxable. Why it is taxable? Because it is exceeding 5 lakh. So just 3 things to be noted. Situation 1, situation 2, date of issue, and then the percentage and amount. If you are going through with this thing, you are easily able to find out the taxability and the exemption. You can see the answer over here. Now that was the cases of single policy. Now we are moving on to the multiple policies case under more than one eligible life insurance policy. Again, situation one is running because consideration is receiving the first time. But now there are multiple policies, more than one policy. What will happen in that? The aggregate amount of those policy, those premium does not exceed 5 lakh, etc. needs to be taken for the purpose of exemption. So we have gone through with this case. They are just going to make you understand these provision according to situation 1 and 2 and with example. So what will happen? Such consideration would be eligible for exemption if all eligible policies premium does not exceed 5 lakh. If it exceeds, so what we will do? The aggregate amount of the premium payable does not exceed 5 lakh rupees. We will take the exemption for only those policies. For example 5, 6, 7. Now let's see. Example number 4 says date of issue is 1/4/2023 and 1/4/2023. Clear? Annual premium in this case is 3 lakh, 2 lakh. 3 and 2 is 5 lakh rupees. Two policies is there. Capital sum assured 30, 20. Amount is 32 lakh, 21 lakh. So what would be your answer? Whether these repayment is exempted or taxable? What is the correct answer? Ishan is saying exempted. Priyanshi is saying exempted. Anubhav is saying exempted. Vemuri, Janvi is saying exempted. Pooja exempted. Tanu exempted. Almas, Soumya, Harshada, Julie, Anubhav. Well done, everyone. Everyone has given the correct answer. Kirti, exempt. Very good. Well done. That means you are understanding the concept. I am not showing the answer. Still, I believe you are answering faster than me. I have to think whether it's going to be exempt or taxable. So you are more smart and more fast. The generation is so smart. Okay. So I respect this generation because they are too fast. They are too smart to handle anything in their life. So because that does not exceed aggregate 5 lakh, it is up to 5 lakh. Up to 5 lakh exemption will be there. So if it is 5 lakh 1 rupees, then problem would be there. But till now, there is no problem. So that is going to be exempt. You can see. In this case, the aggregate of annual premium payable is 5 lakh. Both A and B does not exceed 10% or 5 lakh. So both A and B would be exempted. Well done, students. Now, example 5, date of issue is 1st April 23, premium is 450, 550. So now you can tell me which is going to be exempted, which is going to be taxable. As simple as that. A is going to be exempted and B is going to be taxable. That is my example number 5. So you can see this is going to be exempted and B is going to be taxable. Why? Because it's exceeding 5 lakh rupees. Only one A can be exempted. Well done. Very nice. So next, solve yourself. Example 6. Date of issue we have. Annual premium 1 lakh, 350 and 6. And out of these three policy, which is going to be exempted and which is going to be taxable? You can see we are going through situation number 1 because there is no earlier exemption section 1010D has been claimed. So it's very simple. Now you can see a single policy or multiple policy. How easy is those kind of concept to solve? So you can see the concept says A and B need to be exempted and C is going to be taxable. I hope it's clear. Example 7, students, solve. We move it on the same page. Now. Okay, read this question. We have 4 policies. Annual premium in front of you, sum assured in front of you, consideration received in 32 and 33 and 33, 34. So I guess this is a time for a break. You can go through with this example and try to solve it. So when we'll be back after the break, we will discuss this example, students. Okay. Let me see if there's any query over there. So Mr. Manish, can we go for a small break? Mr. Manish, can we go for a break? Manish ji, break, Mr. Manish ji, break के लिए जा सकते हैं. Okay, welcome back everyone. I believe you must have your tea, coffee, etc. So we were at example number 7 and I am seeing that most of you have given the correct answer. Very well done. Let's see what is the correct answer. You can see in policy X, in this policy X case, the premium exceeding 5 lakh, it is 5,50,000. Still it is exempted. Why? Because the date is 1st April 2022 up to 31st March 23. The only condition was 10%, which it does fulfill. So that's why that is going to be exempted, because that is not those policy which has been claimed exemption under section 1010D. This is not situation number 2 case. Why it is not situation number 2 case? Because situation 2 case would be applicable if the policies those has been issued on or after 1st April 2023 consideration has been received earlier. You can see in X policy case, you have received earlier in previous year 32-33. And the other policy you are receiving consideration in 33-34. So still you have earlier received the exemption and claim section 1010D exemption for this policy. Still it is situation number 1 case. Why? Because this is a consideration for a policy which is issued before 1/4/2023 and claim section 1010D. So situation 2 would be applicable if this policy has been issued on or after 1/4/2003 and compensation received earlier and claim 32-33. Then if we receive compensation in 33-34, then that would be a case of situation number 2. But not in this case, because this policy has been issued before 1st April 2023. So no 5 lakh concept is applicable on X case because it is not our eligible LIP case. Now, out of these A, B, and C, you can see these two insurance policy premium amount is less than 5 lakh rupees. So these are going to be exempted. This is also exempted. Only this one is taxable. This is a very interesting example because if you go through with this example, you might think that in this example we have already claimed section 1010D exemption earlier. Then why sir is saying this is situation number 1, not 2? Because the exemption of section 1010D has been claimed against a policy which has been issued earlier, before 1st April 2023. That is why it is situation number 1 case. Understood? Well done. Now we are moving on to situation number 2. So what is situation number 2? It says if you have claimed section 1010D exemption in case of earlier exempt eligible policy, triple E policy. This triple E word has been used to make you understand that if it is policy amount has been exempted under section 1010D for eligible earlier exempted LIPs, then situation number 2 would be applicable. Now this is something different. Some different case would be here, but not that much complicated. If you have understood the provision where we have discussed yet, then it would again be very, very easy for all of. Again, there would be 2 cases, single policy and multiple policy. But in this case, there would already be an exemption in earlier year that has been claimed under section 1010D for those policy, those has been issued on or after 1st April 2023. You can see the provision says exactly the same. Consideration has been received by the assessee under any one or more eligible LIPs. Eligible LIP means those have been issued on or after 1st April 2023 during any previous year preceding the current previous year, and it has been claimed exemption. So we have claim exemption for an eligible LIP in earlier year. Such eligible LIP are referred as earlier exempt eligible LIP. Means those LIP, those have been issued on or after 1st April 2023, and exemption has also been claimed for this policy. The exemption would be determined as under. Let's see how. Again, two cases. If that is a single policy, if that is a multiple policy. Now you will see. If aggregate amount of premium payable of such eligible LIP and EEE LIP, eligible exempt early LIP, does not exceed 5 lakh. So we have to see the premium aggregate of eligible LIP as well as those LIP, those has been exempted earlier. So the aggregate of those premium, if does not exceed 5 lakh for any of the previous year during the term of such eligible LIP, an annual premium in that respect does not exceed 10% of actual capital sum assured, consideration would be exempted. If aggregate amount of the policy premium exceeding 5 lakh, then it would not be exempt under section 1010D, if that is a single policy. Now, if it is, multiple policies are there. If the aggregate of such amount of premium payable on such eligible LIP and EEE LIP does not exceed 5 lakh, then there would be exemption under section 1010D. And if the aggregate amount of premium eligible LIP and EEE LIPs exceeding 5 lakh for any of the previous year, in that case, consideration in respect of any of those LIPs aggregate amount of premium along with the aggregate amount of premium of EEE LIPs does not exceed 5 lakh for any of the previous year during the term would be eligible for exemption under section 1010D. Please focus on this word, along. So now we need to check out the premium amount of eligible exempted earlier LIP as well as the eligible LIPs. We will understand with the help of example. So read it very carefully. Example we will solve one by one. Now you can see date of issue is 1st April 2023. The annual premium was 4,50,000. The consideration is 45 lakhs sum assured, and the consideration already received on 1st November 2033. That means previous year 33-34, you have received consideration earlier, 50 lakh rupees. Now, if we will check this policy, it is less than 5 lakh. You can see that. And again, less than 10% and less than 5 lakh. So when in this year, we might have received the consideration. First of all, what would have been happened? Because this X number policy satisfied both the condition. So section 1010D exemption would have been claimed in that year, and that would have been exempted from tax. Clear? Now we have to find it out that in this previous year, 34-35, we have received consideration for 3 policies, A, B, and C. All has been issued on or after 1st April 23. And now we need to see which policy premium can be exempted. Now it's very interesting. Now you have to see that policy A, B, and C, along with the premium of X, whether there could be exemption or not in this situation. Let me tell you, any policy which has been exceeded 10% or 5 lakh is out of the exemption criteria. So this is C is going to be taxable for sure. Now, can you tell me which of A or B? Which one from A or B is going to be exempted and which is going? X, A, and B exempt according to Harshada. Ishan is saying A is exempt and B is taxable. Okay. Tanu is saying B is exempt. Maximum 50,000 remaining is exempt. So both will be taxable. Priyanshi is saying, okay. Miss Soumya is saying A and B exempt. Mohammad Farhan is saying B exempt. Now let me tell you, when I asked this question, I was playing with your brain. Then I ask you that out of A and B, which will be exempt? So your brain is telling you that some A or B, either A or B, one is need to be exempt. I did not set this thing. I did not say this thing that one of them is going to be exempted. I just ask you, which is going to be exempt out of these two? The answer could be no. No one is going to be exempt. Both can be taxable. Both could be exempted, or either one or other going to be taxable. But the correct answer is both is going to be taxable. Nothing is going to be exempted except X. Why? Because in situation number 2, if you have received consideration earlier and it has been claimed exemption, it is the part of your eligible exempted earlier policy, then for the purpose of 5 lakh rupees limit, you have to check out the premium along with the word I asked you, along with the aggregate amount of your eligible LIPs and earlier exempted eligible LIP also. So we have to see that X plus A, the premium 4.5 lakh plus 1, that is 5.5 lakh. So A cannot be exempted. Then we will make a combination of X plus B. 4.5 lakh plus 1.5 lakh. It's 6. Cannot be exempted. And of course, C individually exceeding 5 lakh. So do not need to check that calculation of C. That is automatically taxable. So in case of situation number 2, when you have received the eligible earlier exempt policy consideration and you have claimed exemption, in that situation, if you are going to check the taxability of other LIP consideration, then you have to take the premium of that policy also for finding out that 5 lakh rupees limit. So X and A, you can find it out, that is going to be taxable exceeding. Then you will check X and B or X and C. C though already out of the game. So all three policies are going to be taxable. You will understand when we will discuss next example. Then you need to solve yourself. You need to make adjustment. That is why it's very important. You can see we did not do this in the earlier example, the example number 7, because that policy was before 1st April 2023. That is not the part of my eligible LIP. So 1st April 2023 consideration is eligible LIP. So whenever you will find out any consideration in future, you have to take the premium also of the previous eligible earlier exempt LIC to find out the limit of 5 lakh. You can see this answer. Okay, now try this one yourself. Date of issue 1st April 2023, 24, 24, 24. So all are eligible LIPs. Out of this has been exempted earlier. You will see the consideration is received earlier. So this would be earlier exempted eligible LIP. So if there is eligible LIPs and earlier exempted eligible LIPs, you have to combine the consideration. If this policy date is before 1st April 2023, as example number 7, then we will not consider the premium of this policy because that is not my eligible exempted earlier LIP. Now you can see 250 was the premium, sum assured was 25 lakh, 30 lakh. So this premium satisfied 10% condition as well as 5 lakh condition both. Now the consideration of X which has been received 30 lakh that has been exempted earlier under section 1010T in that previous year, that is exempted. So we have already claimed the exemption. Now we have received the consideration for these three policies, and now you have to find it out of A, B, and C, which is going to be taxable and which is going to be exempted. And if, let me write it down, the consideration over here for A, B, and C, 24, 38, 70. The consideration is 24 lakh, 38 lakh, and 70 lakh. 60, in case of this, the premium is 6 lakh rupees. So this is out of the game initially. So C is going to be taxed for sure. Now you have option. Out of A and B, X is exempted, C is taxable. Now, out of A or B, which is going to be exempted? Which should be exempted or which should be taxed? Both are eligible for exemption. All of three, they cannot be eligible for exemption. If you will try this, like X plus A plus B, the consideration would be 7 lakh. So all three cannot be exempt. If this is less than 5 lakh, we can exempt X, A and B both. Now we have to check X and A. Is it eligible for exemption? The premium is 4.5 lakh. And if X and B, then the premium payment would be 5 lakh. So they both are eligible for exemption technically, but we have to decide which one we should claim for the purpose of exemption. Only one could be exempted because three cannot be exempted, because A, B and X, if we add the premium exceeding, so either it could be X and A or X or B. So which would be more beneficial to the assessee? Of course, the consideration of which is higher. So B would be better, because if we exempt B, this is going to be exempted and taxable value would be 24 lakh. If you will claim the exemption of A, then 38 would be taxable. So that is the case. We have to claim the exemption of X and B. So A is going to be taxed. B is going to be exempted. I hope now you understand. Situation 1 and situation 2 is really, really important to identify which kind of question you are going to solve. Again, let me tell you, if it is 1st April 2022, not 1st April 2023, then X is exempted. In that case, we can exempt these two all. But because that is not a case, we are in situation number 2. So either we have to exempt X or A or X or B. So the benefit is exempting X and B. You can see the answer, of course, over here. The alternative method is not for use. You can skip it. We're just going to solve as per the normal provision. There is no need to solve this question with alternative method. Now, illustration number 10 for this. Read it very carefully and find it out which is going to be exempted, which is going to be taxable. If you are able to solve this illustration example number 10, so that means you completely understood how to solve these kind of questions. Okay. I'm waiting for the answer, students. Okay, let's see. A consideration is received in previous year 34, 35. It's 35 and 36. A consideration received in 35, 36. Now you can see there are two eligible policies consideration which has been received earlier. Ms. P is saying X and Y are exempt and others are taxable. Memory is also saying the same answer. Well done. Almas is saying X, Y exempt, A, B, C taxable. X and Priyanshi saying X plus A, Y plus B exempt. No, Priyanshi. We have, because you can see the consideration has been received, we have to find it out the taxability in this year. Before this year, you have to first of all check either this would be exempt or not. Then for this year, you have to see, because this year also we are having earlier exempted eligible policy with us. So first of all, the exemption need to be checked for this year, then for this year, then this combination of A, B and C need to be checked. The correct answer is, let me show you what should be the correct answer. So the policy X, you can see it does satisfy both conditions. So this is going to be exempted. Only 2 lakh has been utilized. So this is going to be exempted. In Y case, this is eligible LIP and this is our triple E LIP. So the total is 4 lakh rupees. So Y is also going to be exempted under section 1010D in the previous year 34-35. And this is going to be exempted in section 34-33. So 1010D is applicable for X. Then 1010D has been applicable for Y also. But now the limit is only remaining 1 lakh because 2 lakh and 2 lakh, 4 lakh has been exhausted. So for the purpose of even A, B or C, you can see C is exceeding 5 lakhs. So that is going to be always taxable. Now the limit is remaining only 1 lakh rupees for the purpose of exemption. So if you need to check for the purpose of A, then it would be like this, X plus Y plus A. This would be a combination number 1. This is 6 lakh. That means this is going to be taxable. And then X plus Y plus B. This is 7 lakh rupees again. So this is also not going to be exempt. This is going to be taxable. So you have to include the premium of those eligible exempted earlier policy. Those have been claimed exemption earlier. So when you will check for A, you have to add X and Y premium always. It just, you need to add A only premium. Suppose the A and B premium is not 2 lakh, it's 20,000 and 30,000 only. Suppose in this case, then for the purpose of A, I will take X plus Y plus A, and I also include B. So the aggregate would be only 4,50,000. So A and B could also be exempted if the premium is 20,000 and 30,000. I hope you will understand completely now how to solve this question. Let me tell you once again. We can claim on proportionate basis. No, not allowed. Either full premium should be there, then the exemption could be there. Proportionate premium is not allowed in this case. Okay. So let me tell you again how to solve this LIC repayment question. What is my first step? How you will solve in the examination? What is the first step to solve this question? Is it situation 1 question? Is it situation number 2 question? Okay. Then you have to find out the date of issue. Date of issue, you have to identify whether it's eligible LIP or it's not eligible LIP. Eligible LIP means whether it is on or after 1st April 2023 or it is before 1st April 2023, because 5 lakh limit would be applicable on only this situation. Then the third situation would be whether it's a single policy case or multiple policies. So these 3 things you should kept in your mind before solving this kind of question in your examination. If you are able to find out these things, you will be able to solve this question. Somebody has raised a hand. Okay, let me see. Priyanshi wants to ask something. Can we unmute Priyanshi?
Yes, sir.
Yes, please.
Sir, in
Priyanshi,
example
speak loud.
9. Sir, now clear?
Yes, yes.
Sir, in example 9, sir,
Yes. बोलिए.
sir, जैसे कि consideration has received in X is received before 1 year, fine, and for B, A, B, C consideration is received on 2034. So what if A's consideration is also received with X consideration, which is 2033? Then we will see the aggregate of X and A, and then we will see the remaining exemption.
Yes. So if the consideration of A has also been received in earlier year, or suppose B or C consideration received in later, then for the purpose of B or C taxability, we have to include X and A. Then we will add only B consideration, and after adding B, it will exceed 5 lakh. So B cannot claim the exemption, and also C cannot claim the exemption. Absolutely correct.
Okay, sir.
Okay.
Yes, sir. Thank you.
Okay, moving on further. Now there is a one last concept in this provision. So this has been done. Alternative treatment you can skip. No need to go through with this. Now clarification on GST component. The question arises for the purpose of finding out or calculate the amount of premium, whether we should consider only the premium amount or GST also should be the part of that amount. So the clarification say we will exclude the GST for the purpose of premium calculation. We will only consider the premium amount. Suppose the premium is 1 lakh and GST is 18%, 18,000. So you have paid 1,18,000. Then for the purpose of calculation of premium, only 1 lakh need to be taken into the account. Okay. It is also clarified by the CBDT that for the purpose of premium payable, etc., the GST payable would be excluded. Okay. Now there is term life insurance policy. In case of term life insurance policy, there is a very interesting fact. That's a term insurance plan. The term insurance plan says that in this case, you will get the repayment only in case of death. Suppose Mr. A has taken a term insurance plans for 10 years of 1 crore rupees. So that means if Mr. A expires within 10 years, then you will get 1 crore rupees. And suppose if 10 years has been passed on and Mr. A survived, then you will not get any amount. So term insurance means you will get amount only in case of death or that casualty happens. If there is no casualty, you will not get any repayment. So it's very interesting to answer this question. What will happen in case of term insurance? In case of term insurance, if death is there, then section 1010D would be applicable automatically. There would not be any taxability. And if death has not been there, then there will be no repayment. So if there is no consideration, there is no income. And if there is no income, there the concept of taxability does not arise. Now, one question let me ask from you. Suppose on or after 1st April 2023, the premium paid was 5 lakh. So not 5 lakh, it's 4 lakh for one policy. And for policy number, this was one policy and this is policy number 2. This is 3 lakh. Clear? Suppose this is term insurance policy. That means for the purpose of repayment will arise only in case of death. And there is one more normal policy, policy 1, 2 and policy number 3. We are paying the premium for these policies. So the concept says if there is any term insurance plan policy or the policy on which payment has been received on death, in that case, the premium of that policy would not be considered for the purpose of 5 lakh rupees limit. It is further clarified by the CBDT that the limit of 5 lakh on amount of premium payable would not be applicable in case of term life insurance policy. Why it's not applicable in term insurance policy? Because there would, if there is payment, that would be only in case of death. So 100% exempted. And if death does not occur, then there would be no repayment. So in case of term life insurance policy, we will not consider the premium of term life insurance policy for calculating the limit of 5 lakh in any case. Whether the sum under a life insurance policy is only paid to the nominee in the case of the death of the person insured during the term of the policy, and no amount paid to anyone if the insured person survived the policy tenure. Tenure means time. Hence, any sum received under a term insurance policy shall continue to be exempt under section 1010D, irrespective of the amount of the premium payable in respect of such policy. So suppose there is a term insurance policy, the premium is 10 lakh rupees per annum. So that 5 lakh limit would not be applicable on there because it would be received only in case of death. So the premium amount in case of term insurance policy is not going to be included for any purpose. Further, the premium paid for such policy, that means term policy, would not be counted for checking the limit of 5 lakh on amount of premium payable. It's very interesting question. For the purpose of examination, on the basis of this provision, question can be framed. Now the last provision regarding the concept of these policies, those are not exempted under section 1010D. One last concept, and that is somewhere is connected to deduction topic. In deduction section 80C is going to be discussed or to be understood with the provision of this concept. Now what it is saying, let me explain you, and please be focused, student. Taxability of sum received under a life insurance premium which is not exempt under section 1010B. So if there is any policy which is exempted, then if it is exempted, we do not need to apply this concept. But suppose if there is any LIP which is not exempted, which is taxable, then this concept would be applicable to claim some benefit out of those policies. And what it says, where any sum is received, including the amount allocated by way of bonus at the time during a previous year under a life insurance policy other than the sum received under a ULIP and a Keyman, because in that case that is going to be taxed always. We are talking about other than ULIP and Keyman insurance policy. And again, that policy which has not been exempted earlier, like you have seen in the example, in case A and B and taxable and C taxable. So if that case is there, that some policy has been taxed which did not able to claim the exemption under section 1010D, so that kind of policy consideration can claim this benefit. And what it says, let me explain you with the help of example. Suppose premium paid 5 lakh rupees in year 1. If you paid premium, then you can claim deduction under section 80C up to 1,50,000. Suppose in this case, we have claimed deduction for this premium, and that is 1,50,000 has been claimed as deduction under section 80C. So out of this 5 lakh, how much deduction we did not claim? Out of this 5 lakh, we have claimed 150 as a deduction. But 3,50,000 has not been claimed as deduction for year 1. Clear? So this 350 is my expenditure for premium, which has not been deduction claimed under section 80C. Okay. In second year, we have paid premium of 6 lakh rupees. Again, out of this 6 lakh, 1,50,000 has been claimed as deduction and 4,50,000 has not been claimed as deduction because the limit is maximum 1,50,000 under section 80C. So 350 we did not claim deduction and 450 aggregate is 8 lakh. Suppose in third year, we paid 7 lakh rupees as a premium. And again, we claim deduction under section 80C is 1,50,000. So remaining 150, we could not claim as deduction because it is exceeds the limit of 1,50,000. So how much it has been? 8 and 550, that means 13,50,000. That was third year. Now suppose in fourth year, you have paid premium again 7 lakh. And out of that premium again, you have claimed deduction under section 80C 150. The remaining 550 again, you did not claim as deduction. So now total is 19 lakh rupees. We did not claim as deduction. How it came? 350 plus 450 plus 550 and plus 550. So in those 4 years, we have paid premium. And out of that premium, we have claimed 150 lakh each year. So the remaining 19 lakh, we did not claim as a deduction. Now suppose what happened? We have received consideration in fifth year for this policy, that is 50 lakh rupees we have received as a consideration. Now there would be two situations. This 50 lakh either is going to be exempted under section 1010D, whether it's on death, etc. So if it is exempted, then this concept of deduction, whatever we are doing, would not be applicable. If that is exempted, the problem will arise if this 50 lakh does not exempt it. And remember, that should not be a ULIP policy, that should not be a Keyman policy. In case of Keyman ULIP, deduction of 1010D not applicable, but we cannot take this benefit of 19 lakh. So if it is other than ULIP and Keyman, and you have received consideration and you cannot claim exemption under section 1010D, then government is giving you a benefit. That against this policy premium, whatever you have paid for last 4 years, out of that policy, we have paid 25 lakh rupees premium. 5 and 6, 11, 11 and 7, 17, 18, and 18 and 7, 25 lakh. So out of this 25 lakh, we have already claimed 6 lakh rupees as deduction. So remaining 90 lakh, we did not claim as deduction. So that's my loss. That I have paid 25 lakh for premium, only I have claimed deduction of 6 lakh. So 19 lakh rupees benefit I did not have claimed. So government says, wait, we will give the benefit of that 90 lakh in the year of repayment or consideration received if that has not been exempted earlier. So out of this 50, 19 lakh would be deductible and only taxability would be 31 lakh. So in the last 7, 8, 9, 10 example, we were seeing that this is going to be tax policy A tax, B tax. So whatever consideration has been given for policies in A or B, if the examiner says that in these policies, those are going to be taxed, we have paid premium of suppose 20 lakh, but claim deduction on a section 80C only 12 lakh. So whatever balance amount is there, suppose 8 lakh left, you can reduce that 8 lakh from the consideration. So the balance would be going to tax. So this concept would be applicable in all situations, situation 1 and 2, whatever we have seen. In those situations, if there is no 1010D exemption is there, then you can claim or take the benefit of the amount of deduction, whatever you have not claimed earlier. Now suppose after receiving 50 lakh, in this case, after receiving 50 lakh, in the next year, in the 5th year, you have paid premium again for 10 lakh rupees. Out of this 10 lakh, you have claimed deduction section 80C 1.5 lakh. So 8.5 lakh you did not claim. Again, suppose the next year, you have received 70 lakh rupees consideration for the policy. Then the 8.5 lakh which you did not claim earlier, again you can reduce it. Why I am telling you? Because out of this 70 lakh, this 90 lakh benefit you are not going to reduce again because you have already taken the benefit of 19 lakh in the earlier year. So if you have claimed the deduction out of compensation received earlier of any amount, you cannot take the benefit again. So if you have paid the extra amount in next year, again the remaining 8.5 lakh you can claim as deduction whenever the consideration has been received, if that consideration not exempt under section 1010D. Understood? So this is the concept which is going to be explained over here. You can go through with this provision and you can see the format also suggests how we can claim the benefit. You can go through with this provision because I want to discuss with you some example and test your knowledge question. So all of the provision we have already discussed in the last session. We have gone through with all these concepts. So now I am going to discuss with you the examples, the illustration, the test your knowledge question, which we have left earlier. So let me see. 50 lakh is also compensation received in example. Yes, Ishan, the 50 lakh we received in 4th year. So we have reduced the 19 lakh from that amount. And suppose after 1 year, we again received 70 lakh rupees from the same policy. Then the remaining 8.5 lakh benefit you can claim for any other amount of consideration you received extra. So first of all, we need to discuss illustration number 1. You can see Rahul, a resident Indian holding 28% of equity shares in a company, took a loan of 5 lakh from the same company. So you can see he is having the more than or equal to 10% beneficial ownership in that particular company. On the date of granting a loan, the company is having accumulated profit of 4 lakh. So the dividend could be maximum 4 lakh. Now the question says, is the amount of loan taxable as deemed dividend if the company is a company in which public are substantially interested? The answer is no. Because this deemed dividend concept is applicable on closely held company. And this is called widely held company. This is the company in which public are substantially interested, then section 222E does not apply. So what if your answer, if that is not a company in which public are substantially interested, that would be our deemed dividend. A simple question. Now we are moving to illustration number 2. Okay, illustration number 2 says, so illustration 2 says there are specific circumstances and you have to tell whether this income is going to be taxed as income from other source or not. So Mr. A dealers in shares. There is a very interesting provision in case of gifts that if you are receiving any asset as stock in trade, then section 56 210 provision would not be applicable. Gift concept would not be applicable. So Mr. A dealers in shares. So if he'll receive shares or if he'll receive anything like a stock in trade, then income from other source provision would not be applicable. Remember this. Received the following without consideration during the previous year 24-25 from his friend Mr. B. Cash gift of 75,000 on his anniversary. So if he received on marriage, then it could be exempted. Or if that has been received from relative, that could be exempted, but he received from friend exceeding 50,000 on anniversary. So this is going to be taxable. Bullion, the fair market value, which was 60,000 on his birthday. He received each and all these things from his friend. So again, this is exceeding 50,000, going to be taxed. A plot of land at Faridabad on 1st July 2024. The stamp duty value, which is 5 lakh on that date, Mr. B had purchased the land in April 2009. So his friend Mr. B gives him a plot of land on 1st July 24 for which stamp duty value was 5 lakh. And no consideration has been paid. So what will happen? This 5 lakh would be again income from other source in the hands of Mr. A. Now, Mr. A purchased from his friend Mr. C, who is also a dealer in shares, 100 shares of X Limited at the rate of 400 each on 19 June 2023. The fair market value is 600 each on that date. Mr. A sold these shares in the course of his business on 23rd July 24. So shares also include in those assets, those will be considered as gift. But the problem is there. The receiver receives something which is for inadequate consideration. The inadequate consideration is 200 rupees per share. But the problem is this, the recipient received this thing as a stock in trade. So there would not be any treatment under income from other source for this information because that is his stock in trade, not his capital asset. So income from other source provision is not applicable because the question asks you to calculate the income from other source. Okay. Further, on 1st November 24, Mr. A took possession of a property booked by him 2 years back at 20 lakh. So he got a property possession only for 20 lakh. The stamp duty value of the property is on 1st November 32 lakh and the date of booking it was 23 lakh. He had paid 1 lakh by account paid check as down payment on the date of booking. So what will happen? You have paid 23 lakh rupees. The stamp duty value was 23 lakh rupees at the time of booking. And now it is 32 lakh rupees. So because the payment has been made by account paid check, so we will consider this value for the purpose of finding out the income from other source. Under income from other source, if that is inadequate consideration, because consideration you have paid 20 lakh rupees. So we have to see whether we are going to tax it or not. For the purpose of this, we have to see two conditions. The difference should exceed 50,000 and 10% of consideration, whichever is higher. So in this case, the consideration is 20 lakhs, so 2 lakh or 50,000. 2 lakh is there. So if the difference between the consideration and stamp duty value, which is 3 lakh, is exceeding the higher of these two, then that difference is going to be your income from other source. So because 3 lakh exceeding 2 lakh, so in this case, income from other source would be 3 lakh. On 1st March 25, he sold the plot of land for 7 lakh. So what plot of land he received for 5 lakh? 5 lakh rupees value, stamp duty value he received, which has been treated as his income from other source. And that plot of land he has transferred for 7 lakh rupees within a year. So that is a short-term capital asset. So a short-term capital gain of 2 lakh rupees would be there under capital gain. So you would be asked to calculate the income from other source and capital gain. So we have calculated the income under income from other source and capital gain. We are having the solution also. You can go through with the solution in detail. And if there is any issue, you can ask me in the next session. That would be on day after tomorrow. Stock in trade is going to be taxed under PGBP head, but not at the time of receipt. When he will transfer that stock in trade, then in this question, the sale value has not been given. So we cannot find out the PGBP income in this head, Mr. Anil. Okay. Now, illustration number 3. It is very simple. You can go through with this. This is based on the exemption in which if you receive the gift from relative, etc., that would be exempted. So it is based on that concept. You can go through with it. I want to discuss this illustration number 4. That is more interesting. And the solution looks very huge and lengthy. So I would like to discuss this case. So you understand that this solution you might be feeling that very difficult to understand, but that is only a 2 or 3 line solution. They just provide the full provision in the act to make you understand the detail of this question. So always believe that you have to do your best effort. So it happens when if you try to solve this illustration number 4 after seeing the solution, so you might be going to skip this question. Okay, it is very difficult to understand, it's huge solution, so I might be not able to solve it. But believe me, that is the most easy example out of these all examples we have discussed. You just need to understand the question, and it is very interesting question also. Understand this question first. Mr. Hari, a property dealer, sold a building. So he's a property dealer. So this is a business asset for it. Okay, it's a stock in trade. In the course of his business to his friend, Mr. Rajesh, who is a dealer in automobile spare parts. So Rajesh is receiving building as an asset, okay, for 90 lakh rupees on 1st January 2025. With the stamp duty value was 150 lakh. The agreement was, however, entered on 1st September 24 when the stamp duty value was 140 lakh. So we have to find it out which stamp duty value we need to take for the purpose of gift provision. Hari had received a down payment of 15 lakh by a cross check from Rajesh on the date of agreement. So now you can tell me, or can you tell me, which value we should consider for the purpose of stamp duty value, whether 150 lakh or 140 lakh? Mohammad Farhan is saying 140 lakh, Rajveer is saying 150 lakh, Soumya is saying 140 lakh. And it's a very interesting question, I told you. The check should be account pay check. The word has been used, cross check. Either should be RTGS, NEFT, IMPS, UPI payment, or account pay check. Cross check is equivalent to a bearer check in case of income tax. So because it has been paid via cross check, so at the time of transfer value, we need to take. Agreement value was 140. That is not going to be applicable. The transfer value need to be there. If it is an account pay check, then we will take 140. But because it is not an account pay check, so 150 lakh need to be taken for the purpose of provisions. Okay. Discuss the implication in the hands of Hari and Rajesh, assuming Mr. Hari purchased this building for 75 lakh on 12 July 2023. Would your answer be different if Hari was a share broker instead of a property dealer? So we will see the solution of this question. Let me show you the solution. Hari was a builder. And the other was Mr. Rajesh. He is a automobile dealer. So Hari sold a property as a stock in trade to Mr. Rajesh for 90 lakh rupees. The stamp duty value we are going to take on the date of agreement, which is government of registry, which is 150 lakh. Now, Mr. Rajesh receives something for inadequate consideration, immovable property. For inadequate consideration, and index is 60 lakh rupees. So the difference is 60 lakh rupees. So for the purpose of taxability of this difference, we have to find out the higher of out of these two things, 50,000 and 10% of consideration, which would be 9 lakh. Whichever is higher is 9 lakh. So if your difference is exceeding this higher value, the difference is going to be income from other source in the hands of Mr. Rajesh. So this is the treatment in the hands of Mr. Rajesh. Now, what is the treatment in the hands of Mr. Hari? Because he is transferring his business asset. So the sale consideration he is receiving, that would be 150 lakh as per section 43CA. And the purchase value has been given in the question was 75 lakh. The stock has been purchased for 75. So the net profit would be 75 lakh in the hands of Mr. Hari. Taxability of 75 lakh. Now the question says, suppose Mr. Hari is not a builder, he is a dealer in shares. So now the asset is transferred, is not stock in trade. Now it becomes a capital asset. Now this building is a capital asset. So the treatment in the hands of Mr. Rajesh would not be affected. It would remain same treatment. But yes, the treatment in the hands of Mr. Hari would be changed because now it's a long-term or short-term. It's a short-term capital asset. And now the treatment would be 150 lakh would be sale consideration. Now sale consideration would be as per section 50C. In PGBP it is section 143CA and it's over here is 50C. The cost of acquisition would be 75 lakh and 75 lakh would be your short-term capital gain. So you can see this is the solution. And if you see how this solution in your study material, that would be something like this. So it is not that institute is providing you a solution lengthy. They are providing you in details. So if you read this completely, you will understand each and everything. You can see they are providing you that this is section 43CA. Then they explain the full provision of income from other source. Then they explain the NEFT, cross-check concept, etc. over here also. So you can go through with this solution if you want to understand the detail of each and every provision. And then if it is the second case, what would be the difference? No difference in the hands of Mr. Rajesh, but in the case of Mr. Hari, that would be the capital gain concept. This was illustration number 3. We have gone through illustration number 4, I guess. In the next session, we will discuss. Now illustration number 6 is there, but there is illustration number 5 also. Where is illustration number 5? I guess it's a simple illustration. Illustration number 5 is over here. That we have discussed in the last session. This is for disaster compensation case. Okay. Now illustration number 6. Illustration 6 is for enhanced compensation. So everything is important. Do not just believe on your luck that I should cover this chapter or I should skip easy provision. Please do not follow this kind of practice for your examination. Each and everything is important. Like this illustration number 6, we have discussed, and it is regarding the insurance compensation. So not insurance compensation, enhanced compensation in respect of compulsory acquisition interest. So interest on enhanced compensation received by Mr. G during the previous year is 5 lakh and 150 lakh interest and 1,65,000 and 1,85,000 related to previous year 22, 23, 20 and 21 and 22 and 20 and 21 and 24, 25. So the interest on enhanced compensation is going to be taxed in the year in which you received that compensation. So you received in current previous year. So out of the receipt, 50% is going to be taxed and 50% is going to be exempted, and the taxable value is going to be taxed under income from other source. So these were the illustration. We have left with test your knowledge question that we will take, or we could take in day after tomorrow also. Before that, let me tell you a very interesting story today. So what happened once, is there any query? No yet. There was one person, एक person था जिसको जॉब की बहुत जरूरत थी और उसके पास बहुत कम पैसे थे, उसके पास सिर्फ 10,000 रुपए थे जो बचे हुए थे। 10,000 ज्यादा हो गए, 1,000 रुपए मान लेते, 1,000 रुपए थे उसके पास। और उसने एक न्यूज आर्टिकल देखा, उसमें एक एम्प्लॉयमेंट का ऑप्शन था कि एक जॉब की रिक्वायरमेंट थी एक वर्कर की, एक ऑफिस में जहां पर उसे क्लीनिंग का काम करना था, क्लीनिंग, स्वीपिंग एटसेट्रा। कोई और काम नहीं मिल रहा था, तो वो उस इंटरव्यू के लिए अपने घर से गया और उसका घर वहां से काफी दूर था। तो उसने बस के पैसे बचाए और वॉक करते करते 10-20 किलोमीटर चलकर उस कंपनी में इंटरव्यू के लिए गया। बहुत सारे लोग वहाँ इंटरव्यू देने आए थे, उसका इंटरव्यू हुआ और उसने जो भी क्वेश्चंस थे उसका अच्छी तरह से आंसर दिया। और उसने, जो इंटरव्यू लेने वाले थे कंपनी वालों ने लगा ही इज द राइट कैंडिडेट। उन्होंने उसको बोला कि वी आर सिलेक्टिंग यू, आपकी इतनी इतनी सैलरी होगी और आप हमें अपना ईमेल आईडी दीजिए, हम उस पर आपको अपॉइंटमेंट लेटर भेज देते। तो उसने कहा मेरा कोई ईमेल आईडी नहीं है, मैंने बनाया ही नहीं आज तक, जरूरत ही नहीं। कंपनी ने कहा दिस इज अ प्रॉब्लम, हमारी कंपनी की पॉलिसी है कि हम सारे डॉक्यूमेंट्स ईमेल पर ही देते हैं, सो इफ यू डू नॉट हैव एन ईमेल आईडी सो यू आर नॉट एलिजिबल फॉर द जॉब। तो जॉब उसके हाथ से चली गई। बाकी लोग जो आए थे उनमें से जिसके पास ये एलिजिबिलिटी थी उसने ईमेल आईडी दी और जॉब किसी और को। वो बड़ा निराश लौटा अपने वापस ऑफिस से और रास्ते में उसने देखा एक मार्केट है जहां पर फ्रूट्स वेजिटेबल्स मिलते हैं। उसने नोटिस करा कि जो लोग उसके घर के पास रहते हैं वो बस करके इतनी दूर यहाँ से फ्रूट्स वेजिटेबल लेने आते हैं, बिकॉज आसपास उसके घर के पास कोई भी ऐसी शॉप नहीं थी। तो उसकी जेब में जो 1,000 रुपीज थे उसने वहां से टमाटोज खरीदे 1,000 रुपीज के। वहां से उन टमाटोज को लेकर गया अपने एरिया में और वहां उसने जितने में खरीदे थे 1,000 में, उससे ज्यादा में उसे बेचा 1,500 रुपीज, 1,500 रुपये। नेक्स्ट डे उसने कहा फिर से मैं ऐसे ही करूंगा, वॉक करके वापस वहां पर आया। फिर उसने 1,500 रुपीज के खरीदे और वहां जाके उसे 2,200 रुपीज में सेल किया। एंड इट स्टार्ट हैपनिंग, उसने धीरे धीरे करके अपना बिजनेस इस तरह से करना शुरू किया। एक बहुत बड़ा सप्लायर बना वो अपनी सिटी का, फ्रूट्स एंड वेजिटेबल्स का, अपनी ग्रोसरी शॉप ओपन करी एटसेट्रा। ही वॉज अ बिग मैन। आफ्टर सम टाइम उसने अपना इंश्योरेंस कराने के लिए एक इंश्योरेंस करने वाले को बुलाया, एजेंट को। एजेंट से उसने कहा मुझे 50 लाख रुपीज और 1 करोड़ का इंश्योरेंस पॉलिसी लेनी है। उसने कहा अपने सारे डॉक्यूमेंट्स दिए। एन इंश्योरेंस पर्सन सेड ओके सर, आप एलिजिबल हैं और आप हमें अपना ईमेल आईडी दीजिए, हम आपको इंश्योरेंस पॉलिसी की कॉपी भेज देते। उसने कहा मेरे पास ईमेल आईडी नहीं। तो जो इंश्योरेंस एजेंट था वो बहुत ही शॉक्ड हुआ। उसने कहा सर आपके पास ईमेल आईडी नहीं है, आपको पता है आपके पास ईमेल आईडी अगर होता तो आप आज क्या कर सकते थे इस लाइफ में। उसने कहा यस मुझे पता है, अगर मेरे पास ईमेल आईडी होता तो मैं आज एक कंपनी में क्लीनिंग कर रहा हूँ। सो दैट वाज अ वेरी इंस्पिरेशनल स्टोरी दैट मे बी लाइफ में आपके प्रॉब्लम्स आएंगे, मे बी सिचुएशन ऐसी आएगी जब आपको लगेगा ये आपकी लाइफ के लिए ठीक नहीं है, बट यू शुड नॉट लूज होप। अपना बेस्ट एफर्ट करते रहिए। अगर कभी ऐसा लगता है कि किसी तरीके से हमारी पढ़ाई हम कर रहे हैं लेकिन ग्रुप नहीं निकल रहा, यू आर गिविंग अ लॉट ऑफ टाइम फॉर योर स्टडीज बट ग्रुप फिर भी नहीं निकल रहा, देन यू हैव टू चेंज योर स्ट्रेटेजीज। अगर आप मॉक टेस्ट नहीं देते हैं, आरटीपी नहीं करते हैं और पास्ट ईयर क्वेश्चंस नहीं करते हैं, उसको करना बहुत जरूरी है। मेरा मानना है कि अगर वो आरटीपी, एमटीपी, प्रीवियस ईयर क्वेश्चन आप करें, दैट वुड बी रियली हेल्पफुल फॉर योर स्टडीज। दैट वाज योर स्टोरी। नाउ वी आर मूविंग ऑन टू our test your knowledge questions. वैसे time has been done. I guess ma'am is also here. Ma'am, you want to say something?
Yes, sir. But if you want to continue with the test your knowledge, I can wait. No issue, sir.
Yes, I want to discuss first question with the students, and I will give some questions.
Sure, sir.
Okay. So, student, this is our test your knowledge question. First question is here, and we have to find it out. Examine under which heads of the following incomes are taxable. So, one by one, we will see whether this income is going to be taxed under which head of income. And I has already write it down in which head of it is going to be taxed. You have to understand why it is going to be taxed in this head of income. So you can see first is rental income in case of property held as stock in trade for 3 years. And I have write it down income from house property. Why? This provision you must have been gone through. under income from house property concept. That if any property held with you as a stock in trade and it has not been sold yet and it has been let out, then for some year it is going to be treated, the rental value is going to be treated as nil. The annual value is going to be nil. But if it is not has been sold it out and it has been rented for third year, then from that year it's going to be taxed under income from house property. Salary received by a partner from his partnership firm is going to be taxed under PGBP. Why? Who will tell me that the salary from a partnership firm is going to be taxed under the head PGBP? Why it is not going to be taxed under salary head of income, students? Who will give the answer? It's a very simple question. You must have gone through with this concept in salary head of chapter. That salary received by a partner from his partnership firm is going to be taxed under PGBP. My question is, why under PGBP? Why it does not taxed under salary head of income? Somebody answered. Miss P saying no employer-employee relationship between partner and firm. Anubhav is saying because the partner is running a business. No, that is not the correct answer, Anubhav. Tanu is saying yes, not employer-employee relationship. Exactly. Almas is also giving the correct answer. Yes, correct. To chargeable any income under the head salary head of income, that is very important that there should be a relationship of employer and employee between the payer and the payee, as the relation of master and servant. In case of partnership firm and partner, there is no relationship of master and servant does exist. So that's why it does not tax under salary head of income, but that is going to be taxed under PGBP. Very well done. A rental income of machinery. So it could be taxed under PGBP head also or income from other source also. It depends upon the nature of activity. If this is a regular nature of activity, then that is going to be your PGBP income. And if it is not frequent, then it could be taxed under income from other source. Winning from lotteries by a person having the same as business activities. Suppose I am a lottery agent. I sold lotteries. I purchased lottery from the company and I sold these lotteries to the customer. And now suppose I won a lottery from the stock I was having. So in which head it is going to be taxed? So it is very straightforward provision that if you are having a casual income, and even if you have that kind of business which related to that casual income, still that would be your income from other source and would be taxed as casual income only. Salary received from member of parliament. We have discussed these provision in income from other source. Again, because no master servant employer-employee relation exists between the government and member of parliament. Because they are the government. How a government form? The member of parliament form a government. So technically they are likely the government itself. So that cannot be taxed under salary head of income. Receipt without consideration. So we are talking about gifts. These are going to be taxed under income from other source. In case of retirement, interest on employees' contribution if provident fund is unrecognized. So you must have gone through this provision under salary head of income. That employees' contribution, if you received from an unrecognized fund, that is going to be taxed under income from other source. The rental income in case of person engaged in the business of letting out of commercial property. So if this is your business activity to letting out the properties, so that means the rental income is not going to be taxed under income from house property, but that is going to be taxed under PGBP. So the remaining examples, the test knowledge question of this chapter, the test of knowledge questions of capital gain that we will discuss day after tomorrow. In the problem session, we will also discuss some MTP, RTP questions and some more question I have framed for you. So that is going to be discussed in day after tomorrow class. Sir, in the problem solving session, which unit we will practice? We will practice capital gain and income from other source problem. chapter need to be discussed. Okay.
Thank you, sir. And students, hoping you'll like the session and all the concept for income from other sources which sir has taught is clear to you. So if you have any query still which is left or which we have not raised, you can raise the query. So I guess all the queries till now has been resolved and you have no queries, but still we have a next session also, that is a problem solving session in which sir will take capital gain income from other sources. And in case you have any other query for other heads of income, that you can also ask from sir. He will definitely guide you for that other heads also. Student, if you see the income from other sources, it is the residuary head. It is the last head of income, but this is not the least, because if you see in the income from other sources, there are some provisions which are very important, like your deemed income dividend concept. There is an amendment also in the deemed dividend regarding your buyback of share, which is from 1st October 2024. Then there is an amendment, there is a provision related to your sum of money which is received without adequate consideration, without consideration or inadequate consideration. Then you have a LIC provision also. When you have the premium payable is exceeding 5 lakh, then what will be the treatment? How it's going to be taxed under the head income from other sources? Then there are certain restriction on the deductions also. There are certain income in which you will not allow any deduction, like suppose in case of casual income, like in case of dividend income, deduction is allowed, but that is allowed only for interest expenses and not for any other expenses. And there's another condition, that is the 20% of the dividend income that will be allowed at an interest deduction. So all these provisions are there in your other sources. So don't take it lightly for the other sources that it's a very small chapter or ignore this chapter. Income from other sources is very important because it is integrated with the capital gain and your PGBP. Like just sir has taken the illustration for 43CA and 50C, where all the provisions are integrated. You have to see 43CA, 50C, then 56 to 10. So don't ignore this chapter, income from other sources, taking it as a very small chapter. Regarding the, sir has rightly mentioned, whatever the solution we have given in the study material, students, that is for your reference. We do not expect you to write that whole provisions in the examination, because definitely it is not possible to write all the provision as we have written in the study material to expect from you to write in the examination. So when you are attempting the question, just be strict to the provision, the relevant provision. Don't write the whole kahani and everything. Just be strict with the reasoning. Why if something is allowed as a deduction, why it is allowed? When something is not allowed as a deduction, what is the reason behind that? So it is very important to substantiate your answer. What happens, student, when you attempt the MCQ, if you see in the MCQ, there is no reasoning required. But when you have a descriptive question, then you have to write your answer and you have to substantiate your answer. So it is better you practice your question. Don't just look at the question in the study material. Just try to solve the question by your own, because that will make you a habit to complete the paper in time, and as well as make a practice habit of writing. Because 100% paper is not your MCQ based. Many students ask me, ma'am, we have know the provision, but we don't know how to write the provision. And that's because of that, we lack marks in the examination. So it is very important you substantiate your answer and do not write. If you know some provision, don't write the provision in detail. You are knowing, so you are writing everything. Just be stick to what is asked and what is the requirement there. Second thing, regarding the section number, at the intermediate level, it's not important you to write the section number. If you remember the section number, then it is very good, but don't quote the wrong section number, because definitely it will fetch you, it will lose your marks. But certain section regarding, like suppose I say TDS section, because TDS section, you should know under which section your TDS is required to be deducted. Your deductions from gross total income. That section definitely you must remember and you should write in the examination. But one second, Ishant is asking, so ma'am, we have to write the answer like provision first and conclusion after that, or we can give reason. Don't write, Ishan, don't write the provision, then conclusion, give the reasoning. Suppose I am saying ki there is a transaction of payment of suppose 12,000 to a person in cash. So you don't need to write what the 40A3 said. Then you just, in this case, this is the situation, don't write. Just take that take the heading, first of all, that payment to some person. Then in the bracket, just give the reason. Allowable, so why it is allowable. If it is not allowable, then why it is not allowable. That's it. You don't need to write the whole kahani for that. Just a simple reason with the situation in the hand. Like not allowable since the payment made to the person exceeds rupees 10,000 in cash. That is the simple crux you have to write. Yes, Priyanshi, what we are saying regarding law, facts, provision, conclusion, that is for case law based question, which is basically for your law, corporate law, your law based paper, or at the final level, because we have a case based questions are come, which is on the judicial pronouncement. So that time you have to write the facts, what is the issue, what is the provision. But for intermediate level, or it is not possible at all. In the 3 hours, it is not possible at all to write all these things. Soumya is asking, ma'am, how manage it and GIT, income tax and GST, since both carry equal 50 marks weightage in examination. Soumya, definitely for that, you have to divide your time and you have to give proper time to both the papers. If you see 50 marks is definitely assigned for income tax, in that 15 marks is assigned for your MCQ based. So in MCQ, your time will be get reduced because you don't need to provide your reasoning, you don't need to write the provision, and your presentation part, that time will be saved. But in the descriptive, you have to devote your time for that. If you see your paper pattern also, if your paper pattern or your syllabus coverage or section wise weightage, I hope all you have know your section wise weightage, from which chapter or which section, how much weightage is assigned for that. But for intermediate, that is not so much, I will say, relevant, or you can decide which chapter to left, because if you see now your hierarchy, everything is important. You can't leave, as sir rightly said, you can't leave any topic or any chapter. All 5 heads of income you have to do, because any question can come on any heads of income. So you have to do your all 5 heads of income. Clubbing, set of, deduction, because that will be a full-fledged question. In that, clubbing can be tested, your set of will be, provisions are there, deduction definitely it will be there. Your TDS, all the time there's a one question on TDS which came, TDS, TCS or advanced tax. Your return filing provisions also. Basic concept you should know definitely, because all rates, surcharge, debate, everything is in the basic concept. And your residential status, because if you don't know the residential status, you will not be able to determine which income is within the scope of that assessment. So if you see, you can't skip any topic or any question. But as you ask about the how to manage it, if you see now, students, that income tax is not that difficult, which you have, created that in your mind. Like as sir taught, income from other sources. So I think all the provisions you have understood very clearly. You don't have any doubt, because you have not practiced yet. When you get the practice, it's better you do the practice again and again. When some provision is there, just create the situation in your mind. Okay, acha, what will happen when this thing is there? What will happen when this thing is there? Don't create hypothetical situation, but the logical situations you have to create in your mind. Because for each and every provision, sir can't make the MCQ or question. We can't make for each provision questions and MCQ. You have to prepare your own question by asking yourself, what will happen in this situation? What will happen in this situation? Which is a logical situation. So if you see now, for that will help you for your better understanding of the provision. And for notes, students, there's a latest recapitulate, Saransh is there, sir is also providing the notes. But I will advise you all to prepare your own notes, because whatever you write by your hand, that remains in your mind, that captures your mind. If you see something, okay, this is there, or this is the provision, that will be in your mind for some time. But when you prepare the notes by your own hand, that resists more in your mind. So all thing is there, you make the, just go through the provisions and understand the provision, and then make your own notes. So make that habit. That will be very useful for this paper also and for other paper also and for your final level examinations. So make that habit. So student, have you any doubt, any general doubt on any specific for other sources or something like that? Okay, so I think that is clear for all of you. So in case you have any doubt also, we will be meeting in the next session. Sir will be there also. He will be also guiding. I will be also there. So student, take the benefit of that section. Next session will be on day after tomorrow, and that will be a complete problem solving. Sir will take capital gain and other sources question. If you have any doubt for any other heads of income or for any other topic also, you can ask the questions from sir. Don't keep the doubt with yourself. It's a good platform which is for you students, for your understanding, to be clear your provision, to just so that you just we just want to keep a hand holding with you so that you can just clear your examination with the good marks. Our agenda is not only to just pass your examination, it should be with the good marks, and that will happen only with your help only, because you have to practice your question, you have to be fully devoted for your classes and for your homework, for your notes, for your practice. So students, this is it for this session. So, sir, I have not.
Yes, ma'am. There's no more query in my chat.
No more query in my chat box also, sir.
We can close the session.
Yes, sir.
Thank you, ma'am. Good night.
Thank you, sir. Thank you, students. Yes, yes.